Hey yo, what's up everyone? What's going on? Welcome to the True Trading Group live stream. My name is Michael Edward. 6 nights a week, Sunday through Friday, right here. We go live and with myself, other TTG Pro Trader moderators, as well as special guests that drop golden nuggets of information and education that can help you become better traders and investors. If you're ready to learn, trade, and profit for real, you've come to the right place. Take a moment, smash that like button, subscribe to the channel. Make sure you share this stream on your own social media. But guys, why should you listen to anything that we talk about on here? And I've got a fantastic educational live stream in store for you guys here today. Get ready to take some notes. You're going to learn something here today with us. All right. I did not figure this stuff out on my own. I began my career working for a fund in New York City, my first job out of college. Then 2008 happened, and that was the Great Recession. But also the same year, I received one of the firm's Trader of the Year awards. But before I was ever able to touch even $1 of their money, first I had to go through an intensive training program, had access to some of the top trading tools, and was part of a community of like-minded traders. And that's exactly what the TTG platform is based on here now today. Guys, we're going to start this live stream off first with about a 15, 20-minute Q&A. Give some time for people to log on. You can ask me questions, whatever's on your mind. Then we are going to be talking about the yield curve. You've been hearing a lot in the media lately about an inverted yield curve. We're going to discuss on this live stream, what is the yield curve? What does it mean when it inverts? What does that mean then for the stock market and economy going forward? And more importantly, what does that mean for your money? So we're going to break all that down here on this live stream. So we're going to talk about the yield curve, an inverted yield curve, and what it means for the markets, the economy, and your money. All right. But first, we're going to do the Q&A. All right. So you guys can fire away, ask me questions, whatever's on your mind while we give some time for people to log on. So go ahead right now, begin typing your questions in chat. There is no such thing as a stupid or silly question. So begin typing away right now. Let's go ahead and begin that Q&A. All right, folks. What do we got here? Who's going to ask our first question of the evening? By the way, guys, don't be shy. Type your questions right in chat. Why did MJ get beat down today? I don't think MJ got beaten down today. What are you talking about? Marijuana stocks were green today. What are you talking about? Canadian stocks? Talking about Canadian stocks. That's why you're asking me. Canadian stocks. Why Canadian stocks get beaten down today? Probably because they're shitty companies. I really don't know. I'm not sure why these companies got beaten down. They moved higher on the hopes of some federal regulation and decriminalization in the United States, which, to be honest with you, does not have anywhere near the impact of Canopy Growth, Tilray, all the Canadian companies as it would on the U.S. operators like Curaleaf, Green Thumb, and et cetera. So maybe people are just realizing that there's not as big of an impact as people may think for like a Tilray and a Canopy Growth as there really is for like a Curaleaf or a Green Thumb. You know, these Canadian marijuana companies are not in very good financial shape. A lot of them have a lot of debt. Some of them are not profitable. You know, their market size in Canada is actually very, very small. And they're going to have, I think, a much more difficult time than people think cracking into the U.S. market when you have juggernauts in the U.S. already, like a Green Thumb, a TerrAscend, Trulieve, Curaleaf. I mean, these are massive companies in the United States that already outperform your Canadian counterparts, like a Canopy, a Tilray, a Kronos, and Aurora. The only reason why you hear about these Canadian companies is because they're traded on a major exchange. The U.S. companies are not legally allowed to trade on a major exchange. They're still on the OTC. So they really are not allowed to get a lot of media coverage on places like CNBC. They're not able to be purchased by most hedge funds. They're not able to be purchased by anyone with a Robinhood account because they trade on the OTC. So anyone that wants cannabis exposure is basically being forced into Canopy Growth, Tilray, Aurora, even though they are not as good of companies as Curaleaf, Green Thumb, Trulieve, which are your U.S. companies. Okay, you're talking about Curaleaf is going to do probably $1.5 billion in revenue this year. I mean, it's just these companies like Tilray, Canopy, they're not even close to those type of revenue numbers, not to mention that Curaleaf is profitable and a lot of these Canadian companies are still not. Is trading real? You guys make money from trading or selling strategies? Is trading real? Rasim, so is trading real? There are literally millions of people around the world that earn a living in the stock market. So therefore, yes, trading is real. Okay. You guys make money from trading or selling strategies. Rasim, we make money from both. Okay. True Trading Group is a business. Okay. True Trading Group is not a charity. All right. True Trading Group is a platform that was created that has 23 employees. Okay. That is a platform that will provide the regular retail trader with the same level of education that they teach at hedge funds, which is what I received when I was working at a fund in New York, my first job out of college. And we also combine that with tools from your top fintech companies that professional traders use to make better informed decisions. So it is expensive to operate True Trading Group as a business. So yes, we sell memberships. Yes, we make money from selling memberships, but True Trading Group is also led by a team of not just myself, but 8 other professional trader moderators that all do, yes, make money. Okay, so I'm not going to sit up here and pretend like True Trading Group is a charity. It's not. It's a business that has 23 employees. And that business exists to empower and educate the retail trader, to level the playing field for the retail trader. Because if you ever want to be consistently profitable in the market, there's a reason why your average mom and pop retail trader is not profitable and all of your professionals are. Okay, it's not that every single person that works on Wall Street has access to some type of special secret that you don't. It's just that they have access to the tools and they were trained and educated by professionals on how to take advantage of opportunities in the market. The average person that opens up a Robinhood account has absolutely no idea what they are doing, therefore they lose money. So to answer your question, we make money both. Talk GME, what is our forecast for the remainder of the week? Let's pull it up. Okay. So when it comes to GameStop, I'll give you kind of my thoughts on the stock. Okay. If the stock gets underneath 160, I think you got to be careful. I think the stock moves significantly lower and probably goes back to 130. That is what I believe is going to happen. I do not believe that, and if I'm wrong, I'm wrong. I do not believe GameStop is going to go back up to here. Okay. I believe it's much more likely that GameStop goes back to here than it goes to here. Okay. So I actually think that GameStop will break itself beneath 160, which is a key level of support for the stock. And then you have a little bit of resistance at 150. But then once you get beneath 150, you're talking about a pullback towards 120, 130 easily. And that's what I think is going to happen. I think you're going to see the stocks in the pullback right down into this region. We can look back, a week from now, 2 weeks from now, and I believe that GameStop will be somewhere down in this region. I think it's more likely that it gets back here than it gets back up to here. So I think the path of least resistance at this point for GameStop is actually to the downside. Can you talk about the news that came through around the end of the day to move markets? I mean, I assume you're talking about Russia-Ukraine news. That's what I assume you're talking about. So you've seen a lot of strength in the market over the last 2 days. Not necessarily today, but if you go back to yesterday, you go back to Monday and Tuesday. Monday and Tuesday, the markets really extended the rally, and I'll pull it up on my I'll pull it up here for you guys. Okay, this move right here, that move was excitement over Russia-Ukraine. That Russia-Ukraine talks were actually constructive, and that you actually saw Russia pull back some soldiers away from certain cities inside of Ukraine. So for the first time, you got action on the ground by the Russian military coinciding with a news headline talking about peace talks actually being constructive. And that's why the markets really moved higher. Towards the end of the day today, I don't really think there was any major news that moved the markets. There was some talks about, some type of attacks and like attacks in other cities were actually ramping up when the Russian military pulled away from other cities, but then were attacking others. Maybe that could have given you a little bit of a pullback at the end of the day, but the markets bounced right back. This wasn't like a big sell-off today at all. I mean, the market's only down a 0.5 percentage point after the rally that you've seen over the last couple of weeks. I mean, today's a blip on the radar. I mean, look when I scan out. You see when I pan this out, I mean, that's what we're talking about after the market's doing this. I mean, it's nothing. It's peanuts. It's literally peanuts. That's not a sell-off. That's just a very minor pullback, and the market's bounced right back. So I don't really think that there was any news, Ryan, that moved the markets towards the end of the day. I just think, it was just a little bit of and the market just kind of trading sideways inside of this little range that you've been now for the last 2 days. Don't be shy, folks. Type your questions. It's the only way we're going to learn, right? Type your questions. I'll take some more. We'll give some time for people to log on because, we're going to be talking about a lot today. I'm going to be going over with you guys. For those that are just joining us, if you guys are just joining us now, I'm going to be covering on this live stream in just a few minutes the yield curve, an inverted yield curve. What is it? What does it mean? Why do people care about it? What does it mean for the markets? What's it mean for the economy? What's it mean for your money? So I'm going to explain to you guys. A lot of people have been hearing a lot about this inverted yield curve. What is it? What does it mean? We're going to talk about that in this live. Right now, I'm just doing a Q&A session. You guys can ask me questions, whatever's on your mind. Mike, what are your thoughts on AMC's huge dip today? Well, my thoughts on AMC's huge dip today is the exact same thing that I think about GameStop. So, the last couple of days on these live streams, I've been kind of telling people that I do not believe that AMC and GameStop are going to give you the mother of all short squeezes. I think that these spikes that the stocks have seen are overdone. They're extended. I think these stocks are going to pull back. And that's all that I believe that has happened here with AMC. AMC has major resistance at $34, and it was, I didn't mean to do that. It was unable to break through it. Damn it, I keep hitting duplicate. Sorry about that. So there's major resistance here at 34 for AMC. And I know whenever I say something that that does not equal AMC, GameStop go up, if I don't say that, a lot of people get mad at me, but the truth is the truth, and my opinion is my opinion. I don't sugarcoat it for anybody because my job is to help my teaching members make money. And what you see here at this $34 level, you see this double bottom here from October. That was a major level of support. When you broke it in December, it then became resistance, and that level is still very much firmly intact. Not to mention, you still have this 200-day moving average, the yellow line on your screen that lined up there as well. That is a major level of resistance for AMC. And AMC shot right up to that area yesterday, got a very heavy rejection, and now you're just continuing that pullback off of that level. All right. Now, I think that the pullback in AMC goes a little bit deeper. And I think before you get a bounce, I think you see AMC down here. I think tomorrow's candle may look something similar to this before you eventually get maybe a little bit of a bounce off of that level. But I think you have a little bit more, maybe one more red day, one more red candle there on AMC before you can get a bounce. Can you talk about MULN? You think it's still a chance to squeeze after today's price action? Yes, absolutely. You got to put MULN. MULN has to stay on the watch list. We've been talking about MULN for the last several weeks. I have not been in MULN for about a week and a half. Okay, going back to 2 weeks ago, we got into MULN at $1.81 and got out at $3.62. The stock has since pulled back to $2.25 and then came out with news today. News was that the company is going to be ready to be selling some of their electric vehicles very soon to a buyer, and that news of the company actually beginning to actually make sales is what caused the stock to spike. $2 is your level on MULN. $2 is a major level of support here. I'll draw the line on my screen for you, for those that are watching here, and you'll see this previous resistance. It was also resistance here. Then you gapped above it. It became support. And now you have the 50-day moving average here, and the stock is still doing a nice job holding above that level. $2 is your line in the sand for MULN. Okay, so long as the stock is above $2, you have to keep the stock on watch. And now the move today on the back of that news held, right? Like, that news came out early in the middle of the day at 1 o'clock, and you did not see a pullback off of that news. That news did not get sold into, right? The stock churned its way higher and then traded sideways. So that's pretty promising price action. All right. I think you got a couple of key levels that I want you to pay attention to. And right now I took you to a 15-minute chart to zoom this in a little bit further. And you'll see, I like to see the stock in a perfect world scenario stay above 275. 275 was your little resistance there from the 28th. You can see that the stock formed a little bit of a bull flag here this afternoon. Ideal scenario, you'd like tomorrow for the stock to break out of that bull flag and then give you a push to retest this resistance level, which is 350. 350 is a key level for MULN. If MULN gets over $3.50, I do believe the stock will squeeze. All right. I do believe the stock can squeeze if you get over 350. So you're set up right now with a little bit of a bull flag here. If you get this action tomorrow, you have to watch for an eventual squeeze once you get over $3.50, and the stock has a chance to get back to at least $4, maybe even continue that squeeze up to $5. But you're going to want to see heavy volume in the stock like you saw today. You're going to want to see more of that tomorrow. So you see how you got this increasing volume there today? You're going to want to see another day of increasing volume. Okay, if you come back tomorrow and the stock does this, let's say the stock does this tomorrow. Okay, let's say it does this. All right, this is a daily chart. So if I see that tomorrow on MULN with a volume bar that looks like that, right, that's going to be disappointing price action. That's going to tell you that there's no more momentum on the back of that news. Okay, but if you see follow through, to today's news with another strong volume day, that, my friends, is a very good sign. And then you look for the possible squeeze that can take you up to, $4.50, maybe even $5. Okay, so you have to keep MULN on watch. 350 is your mark to the upside. Always same story every day, last 2 years, and you give a special discount till midnight. Okay. Chaim Weiser, you are a previous member. Yes, we run sales that expire at midnight with limited spots. Why do we do this? Because no matter what anyone says, everyone wants a deal. This is business and sales 101, Chaim. If you'd like, maybe I'll publish a course called Business and Sales 101 for you. Why does Best Buy, Target, Home Depot, and other major retailers regularly run sales that expire? Same concept, my friend. Why does Best Buy run a sale for a television? Why does that sale expire by a certain day? I also know Adam would not give you a break in the price to stay true to the prices that we offer on here, so that it was fair to everyone. And you didn't want to pay your previous year's subscription price, which was $1,100 when you first signed up in 2020. So before you come on and make negative comments, we can very easily see and know who you are. Okay. And you, my friend, did not want, okay, you wanted a price break, but Adam actually stayed true to the prices, even though you only paid $1,100 when you joined. So, oofa, ouch. Maybe we should send an email to Best Buy and ask them why
maybe tonight you're going to get the first bad review under your name.
Bring it. Mike was so mean to me on a live stream. 1 star. But you're still here. I wonder what that says. You're still on the live stream. I wonder why. Maybe because you're learning. Because we provide real education at True Trading Group. So welcome back. In your opinion, does this run-up have similar behavior as the run-up we saw in October of 2021 with the SPY? That's a really good question. That's a really good question. It is similar in the sense of like a bit of a melt up. The difference is that this was a bear market rally. This was a bull market melt up. That's the biggest difference. Okay. So that's the biggest difference. This was a bear market rally. This was a bull market melt up. Very similar price action. Even if you look at the candles, very, very similar. But the biggest difference that you'll notice is that you see the size of the candles on the way up here off the bear market rally. Bear market rallies are very, 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 very large. They're excessive. Okay. When you're in bull markets, the moves to the upside are typically more of a stair step than a rocket ship. Your biggest moves in history, actually, to the upside have occurred during bear markets. Okay, and it's kind of like a rubber band. Like the further down you pull a rubber band, you let it go, the further it's going to snap back, and you get these very large moves to the upside. But good question. I respect Mike for smart professional review. I did renew earlier this year. Thank you, Olga. I very much appreciate that. Thank you very much. I'm glad to have you part of the team. Is it time to start buying SPY puts for the Fed minutes release? Okay, Mike, excellent question. Now, I believe that the Fed minutes could be what kind of break this bear market rally that we've seen over the last 2 weeks. The Fed minutes are coming out on April 6th. So for you to start buying put options now, a little bit early, a little bit premature, you're going to eat into time decay for really no reason. If you're buying them specifically for that catalyst and for that reason. Now, it is not a guarantee that the market goes down after the Fed minutes are released. Okay. The reason why I think the markets could go down when the Fed minutes are released is that, and when I say go down, I'm not talking about go back to here, but I think when the Fed minutes are released, the SPY can go back into this region you see down here. And this bear market rally that you've seen can cool off, and then you can get a little pullback and a bit of a reset. And then what'll start to happen is you'll start to form a bit of an inverse head and shoulders. And that's what I think you're going to see this year, or for at least the first 2 quarters, where you end up getting a left shoulder, a head, and then the Fed minutes give you a bit of a pullback, and then you'll start to form a right shoulder with a very clear neckline. And then that's what I think the markets are going to start to look like. If we fast forward 2 months from now, I believe that's the chart pattern that the SPY is going to look like. So why I believe the markets are going to pull back after the minutes are released is because right now the markets have completely digested and absorbed the Russian war and raising interest rates. The Fed from January till March, okay, in just 2 months' time has become exponentially more hawkish. At first, coming into this year, people were thinking 3 to 4 rate hikes. We were going to end the year at 0.9% Fed funds rate. Now, people are expecting 7, 8, 9 rate hikes, finishing the year at 2 to 2.5% Fed funds rate. That is as far of a night and day scenario as you could possibly have. And the markets absorbed it, and they absorbed it rather well. The thing that the markets, I don't think, are ready for is if the Fed comes out with very aggressive quantitative tightening by means of balance sheet reduction. The Fed's balance sheet has ballooned to $9 trillion since COVID. That number has to come down. The Fed bought literally trillions of dollars of different assets, bonds, mortgage-backed securities in order to stabilize credit markets and protect the economy from the global pandemic. Okay, that's part of the reason why we have some of this inflation that you guys see now here today. The Fed has to reduce the size of that balance sheet. Now, how can they do that? One of two things. They can either conservatively reduce it, which is allowing maturing securities to just fall off the balance sheet by not reinvesting into them, or aggressively reducing by actually selling securities into the market. Okay. And it doesn't need to be not the equities market, but credit markets and other specialty markets and derivative markets around the world. Okay. So that's the more aggressive way. If the Fed does that aggressively and actually sells trillions of dollars off of that balance sheet in the matter of a year or two, that's going to suck liquidity out of the market because they've got to be selling those securities to someone. So that means that those are securities that are going to be taking up the buying power of different financial institutions around the world. That takes liquidity out of the system. When the Fed buys securities, it's providing liquidity into the system because when they're buying securities, they're buying them from financial institutions around the world, which means now the financial institutions have cash on hand. And where did that cash go last year? It went into the equity markets. So if the Fed starts aggressively selling off their balance sheet, I think that is something that the markets are not ready for. And I believe that the markets will then pull back if that happens. Jerome Powell made one very specific comment during the last Fed meeting when he took his Q&A session after they made their statement about the 25 basis point hike. He was asked about balance sheet runoff. He said, we're not ready to do it, but it's coming in a meeting coming up soon or something like that. He didn't give a timeline of when the balance sheet tightening will begin, but he did say it's coming at an upcoming meeting. But he made a comment and said, you're going to get some details on that maybe when our minutes are released. He actually said that in that Q&A. So what I'm thinking is that because we didn't get balance sheet runoff, the markets kind of put it in the rearview mirror, and then the Fed minutes could be released. If the Fed minutes have anything about the balance sheet runoff game plan, timeline, and the speed of which they're going to sell, the markets may not be ready for that. And that could cause the markets to pull back maybe, 10 to 20 points on the SPY. And I think that's a very realistic scenario, a very tradable scenario, and something I'm going to be watching very closely. Those minutes come out April 6th at 2 p.m. Eastern time. So you bet your ass You better make sure that you're in chat with me on that day, because I will be talking you guys through those Fed minutes when they're released in real time, and we're going to be able to trade that action when it comes. I know that was kind of a long-winded answer, but it was a question that required one. Mike, I've been in puts in a Home Depot since 4:30. How would I identify my exit? I have peeled profits on the way. Let's pull it up. I haven't looked at Home Depot in a while. Whoa. You've been in puts since 4:30. Well, that doesn't make sense because the stock was never at 4:30. Okay, the stock only got to 4:20. So where we are now, where should you be taking profits? Listen, I don't envision Home Depot going any lower than this region right here. So this region that you see right here, and I'll just make it green. I do not think Home Depot goes too much further down than this level that you see here. I also don't know when your expiration is, McClex. So I'm not, he said 3:30. Okay, 3:30. All right, so 3:30. That actually is helpful. So you said 3:30 was a typo. So your inputs from 3:30. Okay, so here we go. So there's 3:30 right there. All right. This area that you're at right now is a support level. So you're already taking some profit off. Good. Well done. Your next level of take profit is undoubtedly in front of 300. 300 is a very important level for Home Depot. That's the Russia invasion low. It's also your previous support level from June. So I'd look for Home Depot, okay, to give you another couple points to the downside, possibly even tomorrow. Take another piece of profit off in front of 300. And then I don't know what your expiration is, but 290 would be my final take profit if you have enough time on your expiration. And why 290? We look back here to the left, and you will notice at 290, clear as day, major flat top resistance from 2020 and 2021. Okay, so that flat top resistance, you look for that to become support this time around. When reviewing charts, how far to the left should you go? Elizabeth, that's a fantastic question. I'm really glad you just asked it, because a lot of people do this incorrectly. When you're looking on a chart and you're looking back left, that's what we always say, right? When you're looking at a chart, look left to identify support and resistance. Now, listen to me very carefully, and then I'll explain it. You go back as far left as you have to until you find relevant levels. Now, what does that mean? That means that as I'm sitting here and we're looking at the SPY, for example, and we look at where we are right now, we're going to look back to the left to identify levels that are relevant to us. Now, I can identify right away one level that is significant, and that's going to be a support level that was previously a level of resistance. And then you have this gap up. So you had the big gap up from yesterday, and then there is your gap fill. So that's why that's one level of support. I don't have to go much further back to identify one of those levels. And then when you look for resistance, you'll identify a resistance level that you can clearly see from right here, okay, which is going to be this level of resistance, right? That was previously a level of support when we made new all-time highs, and then was resistance all the way back here. So that's clearly going to be a level of resistance for us. So you see how I'm able to look back to the left and identify those levels. What you do not need to now do is continue looking left until you find levels that are no longer relevant. Okay, so the mistake that a lot of people make is that now with the SPY, it's a little bit maybe not the best example because of how close we are to all-time highs. But if we look back to the left, one could say, because you can say to yourself, you're like, oh, look, there was a level of resistance, right? There was a high. So someone might incorrectly go and draw a line across this level. And they're going to say, okay, that's going to be a support level right there at 453. And you have this line on your screen. That line is no longer relevant. You don't have to continue going back that far to the left because this level was broken many times. And the market has traded through that level many times. So that level is no longer necessarily relevant. The mistake that a lot of people make is they pull up a chart of, I don't know, like I'm just, I'm trying to think of like, just an example that maybe I can, that we can have on here that, I don't know a stock that like, can't think of one, like just right off the top of my head for us to really look at, but no, I can't think of one just right at the top of my head. But the point that I'm making is a lot of people will go back to the left for a year, 2 years, 5 years, 7 years. You only have to go that far back left until you find a level that's relevant to the current price action. You have to understand what support and resistance are. The only significance of support and resistance price levels is like when you find a resistance level, all that is an area where there's a lot of sell orders on a particular stock. More sell orders than there are buy orders at that area for whatever the reason at that point in time. Once those levels are broken, okay, and they are traded through now, like they're not there, you don't need to now consider that still a level. But inexperienced traders will plot every single high and low they see on a chart for the last 5 years. They end up having 35 lines on their screen, and literally their chart, okay, literally their chart will look like this. If your chart looks like this, you are doing support and resistance levels wrong, because there are not that many relevant support and resistance levels on a stock. Now, if you go back over 7 years, yeah, maybe there are at that point, but those levels are broken. They're no longer relevant. The price is only relevant at that point in time. I hope that makes sense, Elizabeth. I hope that I'm explaining that in a way that you're able to understand. I wish I was able to like know this question ahead of time so I can find an example, but I'd have to go through charts to like find an example of exactly what I'm talking about. But once you find the levels that are relevant to the current price, stop and focus. You should only have like 3 to 5 levels. You have more than that, you're plotting too many levels that are no longer relevant. I don't mean to be a douche, but can you say the numbers, please, for levels? I'm normally on my phone and can't see the numbers. Yes, but Plum God, for that answer, it's just an example for the lesson. They're not relevant numbers. They're not relevant numbers for something that we're talking about. Like, I mean, support level for the SPY is going to be around 456, 457. That's one support level for the SPY. That was a line that I drew out. 456, 457, a little support area there on the SPY. Hi, Mike, can you take a look at Apple? Do you think it will go up even more? Well, I mean, Nicole, it is a stone throw away from its all-time high. Do I think Apple goes up from here? It depends what your time frame. If your time frame is 1 week, I think no. If your time frame is 3 years, I say yes. I think Apple's going to find resistance in the low 180s. And I think that Apple will trade, this is a well-defined trading range now for Apple, a very well-defined trading range. And I believe that Apple is going to trade in between, the mid 150s and the low 180s. I think it's going to trade inside that range literally for probably the next 3 to 6 months. Okay. And I think it's more likely that, you'll get a pullback into this region at some point rather than Apple go all the way up to here. Now, eventually, depending on your time horizons, I do believe that Apple crosses over the $3 trillion mark. Remember, Apple touched a $3 trillion market cap right here on this day and then pulled back. So I do believe Apple will eventually eclipse the $3 trillion market cap threshold, just not within the next 2 to 3 days. 2 to 3 years, absolutely. I think we could test and reject at 3 trillion just like last time. Yep. Yep, I'm with you there, Paulie. I am with you there. All right, folks, is that maybe one more question we've got time for? So again, guys, for those that are just joining us, we're talking about the yield curve tonight. All right, the inverted yield curve. We're going to talk about this tonight. What does it mean? What is it? Why does it matter? Why do people care? All right, we're going to go over all that here tonight. All right, I'll take one more question and then we will move on. One more question. Who's it going to be? Josh Martin, how do I get a hold of Shug? I want to come back to TTG. Josh, see what happens when you stray too far away from home, when you get lost? I'm just kidding, Josh. I'm glad you found
it alone. You think it's easy to come back to a guy like me and say, "Hey, I want to rejoin"? It isn't.
I'm kidding. I'm teasing Josh. I'm happy to have you back, Josh. I'm glad you found your way home. My wife is very upset. Someone that lives in our neighborhood, like on the ring, there's like a ring community. They like lost their dog, can't find it. So you always want the lost pets to come home.
You just called him a pet?
It's an example, man. I'm using a real life example.
Yo, Josh, don't listen to him, bro. Just hit me up. 201-775-9702. He's doing his best. It's not easy to do this.
I'm not saying anything bad. I'm not saying anything negative. I'm saying I'm happy you came back, Josh, is what I'm saying. I'm not saying anything negative. You're making it sound like I'm making fun of him. I'm not. That was not the tone or the message I was trying to convey.
Anyways, what was I going to say here? Brian Richards. Go ahead, Michael.
What's your success rate on stock picks? Brian Richards, I have a 3% win rate. I'm kidding. Brian, at True Trading Group, so it's not just myself. My win rate will fluctuate anywhere between the mid and high 70s. And we have a collective win rate amongst all of our moderators inside of True Trading Group. So it's not just myself. There's myself plus 8 other professional traders that are moderators inside of True Trading Group. And we have a collective win rate of just under 80%. There's a journal on our website that you can all go and look at that tracks every buy and every sell that all of our moderators make. This way you can see for yourself, if you followed our trade alerts, you can see how would you be doing if you were following all the alerts that our moderators were calling out. So every day, all of our trades, all the buys, all the sells from our trading accounts get loaded into this spreadsheet every single day. All right. So you can go check for yourself and follow along and say, okay, Mike bought here. He took profit here, he stopped out here, and look at all the other moderators, not just me. So you can follow along and see how you'd be doing if you follow those alerts. Okay. So there you have it. All right, guys. Nice job on the questions. You guys asked some really, really, really good questions here tonight. If I did not get to your questions, okay, I know I can't answer all of them. We try to answer as many as we can. But for those of you that are not members, if I didn't get to your question, we do this 6 nights a week. So don't worry, just subscribe to the channel and then click that notification bell icon so you never miss these live streams. And maybe I'll get to your question on the next live. If you're a member of TTG and I didn't get to your question, just send myself or one of the 8 pro mods a message in chat tomorrow, and we'll be more than happy to help answer your question. Speaking of non-members, I would love to see who is with us here today on this live that's not a member. Guys, if you're not a member of True Trading Group, do me a favor and just type the number 1. Just type the number 1 if you're not a member of TTG. Gordon Laurie, Jabron Lugo, SD Shaka Zulu, My Lead Nation, Linda C, Solomon, Nishikant, Kevin, Chris Frazier, Dr. Abateja, T. Renecki, Bolade Amasholu, Craig the Texan, Falling Lemmings, Josh Martin, soon again, Josh, soon. Cheech and Stocks, Salmon, Kasky Viper, beautiful. A lot of non-members that are with us here today. So listen, guys, real quick, for those that are just joining us, in just about 5 or 10 minutes, we're going to go over the yield curve and what does it mean? What is it? How does it work? And why an inverted yield curve matters. Why are people talking about it right now on the news? If you watch CNBC all day long, they're talking about an inverted yield curve. What does it mean? Why does it matter? We're going to talk. I'm going to explain that to you on this live stream. But first, I'm going to spend about 5 to 10 minutes very quickly. I'll explain to you. There's a couple of people that are asking, how do I join? There are some discounts and incentives that are available for those of you that are interested in this here tonight. And what I'm going to do is I'm going to spend a quick few moments. I'm going to tell you how you can join, what those discounts and incentives are, and then we're going to dive into the inverted yield curve. The membership to True Trading Group, folks, you've got to think of it like Netflix, because you pay one price for the whole year and you get access to all the tools and courses that we have. The price is normally $2,212, but the next 12 people that go to ttgoffer.com and use the code TTG121 at checkout get a 44% discount. Okay, brings the price all the way down to just $12.25 for the whole year. Okay, and the next 12 people to do that will also be getting a $150 cash back upon completing our courses and quizzes. Okay, so I'm being dead serious. You'll pay $12.25, but as soon as you complete our courses and quizzes, we're going to give you $150 cash back. That means your membership now costs you $1,075 for the entire year. You're also going to get 2 small private study groups, which is your chance to get individual attention from one of the pro traders at True Trading Group. We combine a professional trading educational curriculum that's both in-depth and complex, yet easy to understand and implement quickly. It's the similar level of education that I learned when I worked at the fund in New York. Whether you've never traded a day in your life or you've been trading, or you're a professional looking to gain an edge, our curriculum and platform can help you guys reach your goals. We pair that with premium tools from today's top fintech companies that if you purchased on your own, you're spending at least $4,000 to $5,000 a year if you bought these tools on your own. When you join, you're getting access to tools from Benzinga, TradingView, Quote Media, CBOE, Polygon, Trade Ideas, and more. Not to mention you're joining a community of traders that are led by TTG's team of full-time trading mods with about 100 years of combined experience that sports a collective win rate of just under 80% with a focus on stocks, options, crypto futures, day trading, swing trading, and long-term investing that genuinely gives a shit whether you succeed or fail. Results matter at True Trading Group. But your results are the ones that matter most. Not mine, not anybody else's, your results. And they're measurable through your P&L. We exist to empower the retail trader. And the bottom line is that the vast majority of TTG members are making money and they're becoming better traders. And if you don't believe me, I want you to watch this, because now I'm asking a question directed towards my members. If you are a member of True Trading Group, very simple question. Are you making money? If that answer is yes, I want you to type the $sign in chat right now. Now, anyone that's not a member, if you typed the number 1 before, I just want you to try and count how many $signs come across this side of the screen. These $signs are members of True Trading Group that are telling you that they're making money thanks to the platform. They are no different than you. They found True Trading Group most likely the same way that you did, and that's one of these live streams. They had all the same excuses that you have. You have a full-time job, you've got a small account, you lost money before, you don't know anything, you don't think that you can do this. They all had those exact same excuses, yet here they are telling you that they're making money. Now, you just heard me for the last couple of minutes explain to you, why True Trading Group is so great, why you should invest $12.25, join our platform, and entrust us in our education and mentorship to help you reach your goals. Well, now I want you to watch very carefully as I put my own money where my mouth is. Because anyone that joins True Trading Group by midnight tonight, not only do you get a 44% discount, not only do you get $150 cash back upon immediately completing our courses and quizzes, not only do you get 2 small private study group sessions with one of our pro traders, not only do you get all of our current and future courses and tools with your membership, but I'm going to give you double your money back at the end of your membership if you do not make $1,225 back at least once during your membership, as long as you go through the courses, the quizzes, and attend one study group. If you do those 3 things, that means you've actually put in a little bit of an effort and you've actually utilized the platform that you're subscribing to. If you still fail by never making that membership fee back, folks, I am going to give you double your membership fee back. Literally, you will pay $1,225, but if you do not make that back at least once, you're getting $2,450. Guys, hold on. I just got a message from a new member, Jennifer B, who just joined on Saturday. She says, hi, I signed up for the annual membership on Saturday and I've completed all the courses. I'm certified. Can you tell me what is the next step to getting the $200 cash back? Also, made back my membership fee and profits already. Wow. If you don't hear it enough, you guys are awesome. Thank you for all the help and guidance. Wow. All right, guys, Adam, I believe Adam just asked her for her PayPal email. We will send you the $200 immediately. Wow, that's great. Jennifer B, congratulations. Ryan McKeon also made my membership fee back this week. That's amazing. Great job. Mad Medic also said he made his membership fee back this week. Awesome. JCS2 TV says you literally make your money back in the first week. Woo. That's incredible. Congratulations. Bullflag says, I've not completed your courses yet, but my portfolio has already changed direction after half of the courses being completed. That's awesome. Awesome, awesome, awesome. So there you have it. That's great. Really nicely done, folks. Okay. So again, just to clarify, I'm sorry, I just got sidetracked there a little bit. To clarify, as long as you go through the courses, pass the quizzes, and attend one study group, okay? Upon immediately doing that, we're going to send you $150 cash back. Even with that now, if you don't make $12.25 at least once during your membership, we will give you back $2,450 after you guys have gone through that membership. That's how confident we are in our ability to help you become successful. You have to understand, this is what I mean by, and there's the actual message. There it is for proof, in case anybody was wondering if I just made that up. There it is. Okay. We're fully transparent in True Trading Group. Everything we come on here and talk about, guys, full transparency and honesty. Okay. You'll never see anything like it, to be honest with you. I come up here when I have huge winning days, huge red days, winning trades, losing trades. We will always be fully transparent with you guys with every single thing that we do. Okay. So there is that. So guys, it really comes down to, us being confident in our ability to help you become successful. It's not enough for me to just say, that's why the money back guarantee is based on your actual P&L, not mine or anybody else's. Because I can sit up here and say, oh, I just made $1 million. And you're like, well, that's good for you, Mike. I didn't. Well, if we're making money as moderators and you're not making money, then we're not being very good educators and mentors now, are we? So if you struggle, even though we're having success, we're not going to tell you to go kick rocks and say it's your fault. That's why our money back guarantee is based on your P&L. And I have no problem doing that because that's how confident we are in our ability to help you become successful. We've never denied anyone of that refund. We have a refund rate since 2017 of just over 2%. So just over 2% of our members that have signed up since 2017 have received a refund. I share that number with you, not just to prove to you how, or not just to show you how infrequently we get a refund request, but to prove to you that, yes, it's real. We've never denied anybody of that refund that asked for it after completing the courses, the quizzes, and one study group and still never making that membership fee back. All right, so there it is. Okay, 12 spots, folks. 12 spots available. So the next 12 people to go to ttgoffer.com and enter TTG121 coupon code will get that discount, the money back guarantee, the cashback offer, all of it. As long as you see the cashback offer in your checkout cart, that means you're good to go. All right. After tonight at midnight, the cashback offer drops to 100. All right. So you saw Jennifer B. when she joined, the cashback offer was 200. Today it's 150. Tomorrow it's going to be 100. So take advantage of this cashback offer now before it drops to just $100. And then on Sunday at midnight, it's going to drop to $50. So if you guys want to get rewarded for actually going through the courses, you guys got to jump on this now. Then after next week, no cashback offer. All right. We're doing this cashback offer just for now. All right. So there you have it, folks. If you're still unsure if the TTG membership is right for you, we do have a trial membership. Okay. The trial membership is 7 days. Okay. The trial membership is 7 days. All right. It's only $3. All right. We charge $3 just to make sure you are a real person. You get 7 days of immediate access to our trading chat room with thousands of active stock and option traders. You got our real-time stock and option alerts through our mobile app that's available on iOS and Android. You got the Benzinga Pro live news feed. You got 3 sample trading courses that are designed to help make you guys better traders. You got our real-time scanner from Trade Ideas, all for a one-time payment of just $3. There's no auto renew. There's no reoccurring payment. None of that. You pay $3 one time. That's it. Okay. No additional fee. Okay. When you get to the trial, guys, just enter your first name and email and click, yes, I want this. Follow the instructions, and then you are good to go. There it is. Go to ttgthree.com. ttgthree.com. All right, just enter your name, your email, and click, yes, I want this. And you guys can join us for 7 full days and see what it's like to being part of the TTG family. All right, do yourselves a favor, folks. Spend the $3. It'd be the best $3 you ever spent in your life. You can't even get a bag of Doritos for $3 anymore. All right, so there you have it. There's the trial. All right, guys. So with that being said, it's now time for us to break things down here a little bit. And now we're going to get into the educational part of our live stream. Guys, if anybody has questions about the membership, you can send a text message, 201-775-9702. Again, 201-775-9702. If you guys have questions about the membership, send a text message, that number right there at the bottom of your screen. Don't call it. It's a text-only phone number. But send a text message to that number right there on your screen. All right. Okay, folks. Now, what I'd like to do now is get into some of the main topics of our live stream. Okay. Main topic of our live stream, all right, is going to be all about the yield curve. This is going to be an educational, kind of bigger macro picture type of moment for you guys, and explain to you what is the yield curve? Why does it matter? And what is this everyone talking about, an inverted yield curve? Why is that a bad thing? Okay, so the yield curve, the shape of the yield curve is important because the shape of the yield curve, it impacts asset prices. It feeds through into the banks' returns, like how much money that banks can make, which affects how easily they're willing to lend money to consumers. And it's been a reliable indicator of how the economy is expected to do going forward. So the yield curve basically plots on a graph the yield or the interest rate that different debt mechanisms for the US government offer investors in exchange for taking on that debt. Okay, so investors actually watch parts of the yield curve as a recession indicator. Okay, there's a couple of different things that they look at mostly. Okay, I'm going to get to that in just a second. But the U.S. Treasury, all right, they finance the federal government's operations, okay, by issuing different types of debt. Okay, the $23 trillion Treasury market is Treasury bills, which have very short-term maturities. A Treasury bill will mature anywhere from 1 month to 1 year. Then you have notes. Okay, notes are going to be kind of from 2 to 10 years. And then you have bonds that are 20 to 30 years. Okay, so basically all of those instruments pay an interest rate, which is called a yield. So if you buy one of these things, you're going to get interest on your money. The interest of those is plotted on a graph. As interest rates go up, as you get deeper and further out in time, okay, that's going to help the yield curve steepen. As the interest rates that are longer term out get closer and come down in relation to your short-term interest rates, ooh, that wasn't smart. Lifting my arm up like that. So as long-term interest rates and short-term interest rates come closer together, the yield curve flattens. As interest rates that are for the 20-year and 10-year bonds get further away from maybe a 2-year, okay, that's the yield curve steepening. Okay, so typically the curve of the yield curve slopes upward. Now, why? Why are interest rates higher typically the further out you go? Well, that's simply because investors want to be compensated more for taking on risk further out. If you buy a bond with a 30-year maturity, you're taking on a lot of risk, right? 30 years. Now, there's a high chance that rising inflation can lower the expected return from owning a further out bond. So that's why the further out you go, typically the higher the interest rate you're going to get. Everybody, welcome Josh. Josh, welcome back. So Josh did come back home. Josh, it's a pleasure to have you back on board, brother. Everybody, welcome Josh. That means there's just 11 spots left. So the next 11 people, remember, you're going to be getting 44% off. You're going to get the $150 cash back. You're getting to double your money back, guarantee. Okay, the next 11 people to go to ttgoffer.com. Okay, so a 30-year, okay, should have a higher interest rate than, let's say, a 10-year note. And a 10-year note should have a higher interest rate than, let's say, a 2-year note. Right? The further out you go, the more risk you take, the more interest you should earn. That's how it normally is. So a steepening yield curve signals that the expectations of stronger economic activity over time in comparison to, higher inflation and higher interest rates. A flattening yield curve means the opposite. It means that investors expect rate hikes in the near term and have lost confidence in the economy's growth outlook. Okay? So again, let me say that again. A steepening yield curve means strong expectations for economic activity and like higher inflation, higher interest rates further down the road. A flattening yield curve, investors expect interest rates in the near term and a loss of confidence in the economy in the near term. Okay? So that's what it means when the yield curve is steepening. Interest rates on longer dated bonds are going up at a faster pace than shorter term. The spread between long-term and short-term is widening. Flattening means the spread between long-term and short-term is narrowing. Those interest rates are getting closer together. Now, what does it mean when the yield curve actually inverts? Okay. An inverted yield curve has happened with every single recession since 1955. Okay. Every single, so every time you've had a recession since 1955, you had an inverted yield curve either 6 to 24 months prior to the actual recession. Everybody welcome Theodore. Theodore is the newest member of the group. Everybody welcome Theodore. That means now that we have just 10 of those spots left. Everybody welcome Theodore. 10 spots left. Guys, go to TTGoffer.com right now. You guys can enter that coupon code. The cashback offer is going away. So if you guys want to get $150 cash back in your pocket for literally just completing our courses and quizzes, make sure you take advantage of this offer right now because we're getting rid of that cashback offer. Okay. So the yield curve has inverted, and that means short-term interest rates. Everybody welcome Curtis. Curtis, the newest member of the TTG family. Welcome, Curtis. Now just 9 spots left. Everybody welcome Curtis. Guys, I'm serious. 9 spots left, and that's it. That $150 cash back drops to $100. Then it's going to be $50 on Sunday, and then it's gone. No more. All right. So after midnight tonight, that cash back drops to $100. So you guys are literally going to lose out on a free $50. So take advantage of it now. Okay. So when the curve inverts, that means short-term interest rates are higher than long-term interest rates, which is the opposite that it should be. Now, the curve has inverted before each recession since 1955, with the recession coming anywhere from 6 to 24 months after the curve inverted. The last time the 2-year note and the 10-year note inverted was 2019. The following year, we had a recession, but it's thanks to the COVID pandemic. So there's kind of like an asterisk there, right? Everybody welcome Don. Don's the newest member of the group. Don, welcome. Glad to have you part of the group, Don. TTGoffer.com, folks. Everybody welcome Don. Only 8 spots left. All right. So why is the yield curve inverting right now? Short-term bills and notes, interest rates have exploded. Now, the reason why they've exploded is because investors are expecting aggressive rate hikes by the Fed near term. They don't expect rate hikes 10 years from now. They expect rate hikes literally in the next 12 to 24 months of aggressively rising interest rates. So rising rates in the near term, that expectation accompanied with economic growth uncertainty is causing interest rates on short-term notes to spike sharply. All right. In the meantime, your 10, 20, 30-year bonds, those interest rates are going up a lot more slowly, okay, because people are scared that the aggressive interest rate hikes are going to slow down the economy. Okay, so that's why you're getting a flattening of the yield curve. Now, parts of the yield curve have actually already inverted. Okay, the 5-year and 10-year note has already inverted. Right now, you'll get a higher interest rate for buying a 5-year note than you will a 10-year note. Right now, today. The 2-year and 10-year have not yet inverted. Okay. The 5 and 30-year also starting to invert. We got another new member here. Christopher, welcome. Welcome. Christopher, welcome. Newest member of the TTG family, 7 spots left. That's it, 7. TTGoffer.com, guys. TTGoffer.com. Welcome, Christopher. Use that coupon code. Solomon, 6. Guys, hurry up. Because this is good. This offer is good till midnight or the next 6 spots. And at this rate, we had 12 15 minutes ago. Now we're down to 6. I highly doubt we're going to make it to midnight. Once these 6 spots are filled, it's going to move to a $100 cash back offer. And then at Sunday on midnight, it's going to be a $50 cash back offer. And then next week, 0 cash back offer. Okay. So if you guys want $150 cash back, jump on this right now. All right. Now, the 5 and 30-year inverted. When's the last time the 5 and 30-year inverted? Anybody know? 2006. Why is that important? Because what happened in 2008? The Great Recession. Okay. So the last time the 5-year and 30-year inverted was 2006. Okay. And then, like I said, anywhere from 6 to 24 months after the inversion, you get a recession. Okay. The 5 and 30-year, the spread between 5-year notes and the 30-year bond have inverted prior to the 08-09 crash and recession. And it also inverted. Does anybody know the last time it inverted before that? Right before the 2000-2001 dot-com bubble, stock market crash and recession. So the 5 and 30-year has inverted. Last time it inverted was 2006. That's just before the 08-09 recession. And then it inverted prior to that, right before the 2000-2001 recession. Okay. Now, a lot of people might be looking at that and say, whoa, well, that's not good. That sounds really, really bad, right? That sounds really bad. But this time around is a little bit different. We're getting mixed signals. And there's a very specific reason why the yield curve is giving mixed signals. There's a very specific reason why you cannot necessarily rely on the yield curve inversion as definitively now as you have in the past. I'll get to that in just a moment. But what are the mixed signals? 3 of your most commonly looked at yield curve inversions are the 5 and 30-year, the 2 and 10-year, and the 3-month and 10-year. Those are some of the 3 most common spreads that people look at. No, it's not crime. It's not jobs. It's not inflation. I'll explain to you guys why this time around is different and why you're getting mixed signals. Okay. Now, you just heard me explain to you that a steepening yield curve is when longer term interest rates rise at a faster rate than short term, right? Now, you just heard me say the 5 and 30-year have already inverted. The 2 and 10 year are basically flat, about to invert. But the 3 month and the 10 year is actually widening. Huh? What? How does that make sense? Why would the 5 and 30 year invert, the 2 and 10 year invert, but the 3 month and 10 year actually be widening? That doesn't make any sense. If we were to rely on the yield curve inversion as a true recession signal, you would expect the 3 month and 10 year to also be flattening, just like the 2 year and 10 year. Let me explain to you why we have mixed signals. Not everybody's convinced that a flattening yield curve is really telling the true story of what's happening right now in the economy. And why is that? We have an undervalued bond market in the United States because of one very specific reason. The Federal Reserve has been buying trillions of dollars of treasuries and bonds over the last 2 years. The price of bonds and the interest rate that those bonds pay are inverse correlated, which means as the price of bonds go down, the interest rate of the bond goes up. And as the price of bonds go up, the interest rate goes down. So the Federal Reserve was buying trillions of dollars of bonds over the last 2 years because of COVID. That has caused the 10-year Treasury to be drastically undervalued. Okay. Now, a lot of people think that once the Federal Reserve begins shrinking their balance sheet and selling these treasuries, that's going to actually cause the yield curve to start to steepen again. So the people that are in the camp of, I do not believe we're going into a recession, the reasons why they say that are as follows. Extremely tight labor market. You have 10 million job openings, and you do not have 10 million people looking for a job. Unemployment's at 3.8%. Very tight labor market. Tough to have a recession with such a tight labor market. That's one reason why people say no recession. Reason number two, people say no recession. The 3-month bill and the 10-year note is actually steepening. That's a confusing mixed signal. Could signal possibly no recession.
Yo, oh, geez. Did not want to make myself that big. Mike, I hate to interrupt you 1 second, okay?
Sure, what's up?
So I'm going to bring on Jennifer B. She was the comment that was made, how she made her membership.
Oh, nice.
So
Awesome.
let me just bring her on. Jennifer, how are you?
Good.
Hey, Jennifer, what's up?
I'm trying not to show too many things that are at my job here.
No, so I just wanted to because look, anyone can fake a screenshot, right?
Mm-hmm.
So I just wanted to really show that, like, hey, this wasn't staged for the live stream. You literally hit me up, you sent me that, and we did indeed send you the $200 right away.
You did indeed. All of this is real. That's crazy. It's nice to meet you all.
It's nice to meet you too.
Yeah.
And your experience so far has been pretty decent.
It's been perfect. And the only thing I regret is not joining earlier, because I was trying to figure it out. I was doing everything that you guys say not to do. Oh, I can figure it out on my own. It's easy.
Right.
You need the right people coaching you and telling you the right things to look for, and everything that you teach. So you can't do it. You can't just jump in it, thinking you can figure it out.
Awesome. I'm so proud of you to go through the courses as quickly as you did. And
Yeah.
I got it's not a coincidence that you made the membership fee back that quickly.
I mean, because technically I've been watching the streams for a couple months. So if I had started taking the courses a couple months ago, I would have been, in the same place pretty much. But so I was just I wasted enough time. So I wanted to get through it quickly.
Yes.
But you know what? But it's good though, because even if you would have done it several months ago, the market was still ripping higher. You're doing it now at a time where things are more realistic. So what it is that you're doing now will translate way better long term for you.
Mm-hmm.
So it's not like this fake or exaggerated market because of all these things. You're learning and doing well at a time when when things are real. And I think that's important. People, I forget what Mike said, but people wait till the market goes up before they want to do something. And getting in when things are, the way that they are now, you're learning at at a really good spot.
Mm-hmm.
Because when that rip happens again, you're going to be so much better prepared to take advantage of it.
Right.
And better prepared in case the markets go down. A lot of people that are not educated do not know how to make money when stocks go down.
Mm-hmm.
And there's opportunities, no matter if markets are up or down, there are ways to make money in the market. And that's why, once you become a consistently profitable trader, it is the most recession proof occupation that you can have, because it doesn't matter if stocks are up or down, you can make money either way.
Yep. Absolutely.
Awesome. All right, Jennifer, thank you so much for your time. I appreciate it.
Thank you, guys.
Awesome. Take care, Jennifer.
Thank you. Awesome. All right. Sorry for interrupting.
No, you're fine. That was great. That was awesome that she was able to come on there. You saw her trying to run into the closet at work, trying to hide. That was awesome. But glad we have her on there. Yeah, guys, only 6 spots left. All right. There's only 6 of those spots left for you guys to get that cash back. You saw right there. We're dead serious. We're not kidding. We just sent over a PayPal to Jennifer right there. All right. If you guys are unsure about the membership still, don't forget, you got the trial, TTG.com. Just enter your name, your email, click yes, I want this. Get your butts and chat with me tomorrow. All right. Now, back to the inverted yield curve. Okay. Because of this, what I just explained to you, some people are saying you can't rely as heavily on the 10-year as you have in the past because of the Fed's $1 trillion of treasury buying that have occurred over the last 2 years. It has skewed the price of bonds. You actually had researchers at the Fed published a paper on March 25th that actually said the spread between the 2 and 10-year is probably not the best signal of a coming recession anymore. They suggested that a better tell is actually the spread of treasuries with maturities that are less than 2 years. And I just told you that the yield curve between the 3-month and the 10-year is actually steepening. It's not flattening, it's steepening. That's the mixed signal that the markets are dealing with right now. That's why, even though the 2 and 10-year is getting close to inverting, that's why, even though everyone is saying on the media, on the news, oh my God, inverted yield curve, oh my God, the markets are still going up. And everyone's saying, well, this market doesn't make any sense right now. How could the market be going up if the inverted yield curve means a recession? Why are the stock market going up? This is why. Because there's mixed signals. This is not a clear-cut, definite, we're having a recession because the 2 and 10-year is going to invert. It doesn't mean we still can't have a recession, but it means it's not an automatic guarantee. There are other factors at play in this current moment that were not at play in previous times in history. Okay? So that's something that you really need to, I want to make sure that that's something that you really understand. Okay? It's also different because in 2006 and in 2019, and Tom Lee actually just spoke about this on CNBC this afternoon. It's crazy because we scheduled this live stream to talk about the yield curve inversion early this morning. We said this is going to be the topic of tonight's live stream. And then just about 30 minutes before our live stream, Tom Lee from Fundstrat, head of research at Fundstrat, was on CNBC talking to Scott Wapner about the yield curve and about the inversion and why it's not a clear-cut sign of a recession. And what he was mentioning was that the last time the 2 and 10 year inverted was before the 08 crash, right? And then before 2000, and then in 2019, before the COVID crash. Those are the last 2 times your 2 and 10 inverted. Everybody welcome Yakub. Yakub is the newest member of the TTG family now. There's just 5 spots left. Guys, if you want the $150 cash back, you've got to jump. There's only 5 spots left. Then it's going to be $100 cash back, then 50, then nothing. Okay? So I would take advantage of this now. What is your risk? Literally, I'm giving you $150 cash back, and I'm telling you if you don't make your membership fee back at least once, I'm going to give you $2,450 back. Where's your risk? Your risk is only if you're going to be lazy and you're going to put in 0 effort. If you're not going to go through the courses, then yes, you have risk. Jennifer, who was just on this live stream, she got $200 cash back because she completed our courses and she passed our quizzes. Okay. And the reason why we give this cash back offer is because some people say to us, they say, well, if I join, I won't have any money left to trade with. When you join, you shouldn't trade yet. Learn first, trade second. That's why our slogan is learn, trade, profit in that order. Learn first, trade second. So join True Trading Group. I don't care if that means you have $50 in your trading account. Join TTG. Get educated. And as soon as you complete our courses and quizzes, we're sending you cash right into your hand. Okay? But this is a limited time offer. Okay? We were giving back 200. Now it's 150. Jennifer joined last week. So Jennifer got $200 cash back. Now it's 150. Tonight at midnight, it's dropping to 100. Then it's 50. Then it's 0. Get paid to get educated, guys. Okay? Take advantage of it. All right? Now, let me go back. The last time the 2 and 10 inverted was before 08 and before the 2020 crash. Those were real money inversions. Okay? Those were real money inversions. And what that means is after you factor in inflation, okay, the cost of money was very expensive in the near term. Okay? The bond markets have to reflect what the market expects inflation is going to do. That's what the bond market is reflecting. The market expects inflation to spike higher in the near term, but when you go a couple of years out, the market expects inflation to come back to normal. That means, okay, that the yield curve, as you plot it, will and actually could be inverted. But the real yield curve, when you factor in inflation for the real cost of money, is actually normal. The difference in the 06 and 2019 when the yield curve was inverted was that the cost of money, okay, actually was more expensive once you factor in inflation. The Federal Reserve raised rates enough that made money expensive in the short term. They raised rates too aggressively. The real cost of money right now is in the near term is actually still cheap compared to when you look at 10 years out, when you factor in the expectation of inflation. The last time the 2 and 10 inverted, inflation was not high. Inflation now is extremely high. and it's going to be lower in the future than it is now. Prior times, inflation was extremely low. 2019, inflation was like 1.7%. The Federal Reserve's expectation was 2%. So it was actually expected to be higher in the future than it was now. Now it's the opposite. Inflation is extremely high right now, but in 2, 3, 4, 5 years from now, inflation is expected to come all the way back down to 2%. This is why the market is still going higher, even though people on TV are talking about an inverted yield curve. Now, what does this actually mean, though, for you? What does this mean for your money? What does this mean for real people? Okay? When the Fed raises interest rates, it is a necessary tool to use to stop inflation. Okay, they have to do it. But if they do it too aggressively, rising interest rates can actually slow down economic growth, because as you raise interest rates, it increases the cost to borrow money. So everything becomes more expensive to borrow. It costs more to borrow for a mortgage, to borrow for a car loan. The cost of that money is more expensive now. So that slows down growth. It slows down activity. It slows down borrowing. Okay? When short-term rates increase, U.S. banks tend to raise their benchmark rates for different consumer and commercial loans, including like small business loans, credit cards. It makes borrowing more expensive for consumers, for you and I. Mortgage rates also rise. Anyone that's home shopping right now, I feel terrible for you, because if you locked in a mortgage a month ago, you would have got a 3.4% interest rate on a 30-year. Now it's 4.7. When the yield curve steepens, banks are able to borrow money at lower interest rates. So therefore they can lend, okay, at the higher interest rate. And then on the opposite, when the curve flattens, their margins are squeezed and banks don't do very well. That deters lending. When the yield curve flattens, it deters lending, because the banks can't make as much money because the spread between the interest rates is so small. When the yield curve steepens, banks can make a lot more money because now there's a bigger spread. So they're going to be active in loaning money. They want to loan money out. Do we know anyone, Adam, that's actually looking for a house? What is that? Is that Joe?
Yeah, Joe's looking for a house right now and a grinder date. Look at that picture, bro.
Wow, guys, for those that don't know, that's Joe. That is TTG Joe. Only about
Hang on. He's in the background. Joe, can you look at the camera? I can't zoom in.
Hey, Joe.
Hey.
Joe, how old are you in that picture? 19, 21?
Yeah, 20.
1, because you're drinking. Is that a Shirley Temple?
No, I'm
He's bartending. He's bartending.
I know.
For those that don't know, Joe's a level 1 sommelier.
Is it a level 1? I thought it was level 2.
No.
Level 1?
Fun fact about TTG Joe. Michael Miller says, "How do I get rich?" I don't know, Mike.
All right.
Buy
I
a
got
lottery
this.
ticket,
Hang on.
Mike.
No. Mike, here's what I need you to do, bro. It's been a long time for me, but I'm going to be a little rusty, but I think we're going to get it done. Michael Miller, I'm going to need you to bring a gallon of gas, 2 guns, a ski mask, and some rubbers.
Rubbers?
To the address, just shut up. To the address that I send you. When you send a text message, don't call, send a text message only to that number. When you do, I'm going to text you an address. You're going to meet me there. You're not going to ask any questions. And we're going to retire. Just one last job. That's all. Sorry.
Michael Miller, you got that? Got that? All right, folks. So there you have it. Okay. There you have it. Adam, he said he's down. Michael Miller goes, I'm down, bro. Let's do this. All right, folks. So there you have it. Okay. So there's my explanation on the yield curve and an inverted yield curve, why it matters, what it means. Was this helpful? Guys, I sound off in chat right now. Let me know if I explained it in a simple way that you understand. You know, I've always my sister, who's is a high school teacher, she always says that great educators are able to explain complex topics in a simplistic way. And I hope that I was able to achieve that today on this live stream. And I hope all of you have a much better understanding of what the yield curve is, what it means when it inverts, and how in the world the market is still going higher, even though that is happening. Okay. So yes, and see, that is true. Yes. An inverted 2 and 10 yield curve historically is the signal of a recession within the next 6 to 18 months. Okay. There have been cases where it was 24 months. Okay. So 6 to 18 months typically is when you'll see the recession after the yield curve inverts. That's been the case. Okay. There's only been one instance where a recession did not follow the inversion. Okay. But what I'm explaining to you currently now is why this current environment that we are in is different than other scenarios, because we've never had an undervalued 10-year bond or 10-year note, because the Fed had just completed trillions of dollars of bond purchases. That's never been the case before. You've also never had inflation as high as it is leading into that inversion. So this is a very, very unique economic scenario. Very. And I hope that this was helpful. Okay? So, with that being said, for those of you that are not members, this is what you're going to be getting. Okay? True Trading Group is not just, hey guys, I bought this stock, follow me. Yes, myself, the 8 other professional traders, we provide you with all of our trades every single day. You can follow them all. We give them to you in real time. We tell you what we're going to do before we actually do it. It's very easy to follow along with the trades inside of True Trading Group, because the mods and I come on the microphone and we tell you what we're doing before we do it. Okay, that way you can follow along with everything that we do inside of our chat. When I come on and I'm about to buy a stock, I tell everybody before I buy it, I tell them what price I'm going to buy it. I tell them where's my stop loss, where's my profit targets before I even enter the trade. Okay. Now, what I would like to do guys, the code word for tonight, this is for members. If you're not a member, don't worry about this. Okay. If you're not a member, don't worry about this. We do a lot of fun giveaways with members. We give away cash, electronics, do a bunch of fun stuff. We needed 3 code words for tonight to make up for the past 2 nights. We did not issue any code words. So we needed 3 code words for tonight. Okay. So 2 for the last nights plus 1 for tonight. And guys, we have it. The code words are one last job. One last job. Those are the code words for tonight. One last job. Okay. So if you are a member of TTG, one last job. Those are the code words for tonight and for the last 2 nights. Okay. One last job. All right. Folks, what I'm going to do right now for those interested is I am going to actually show you the TTG platform. I'm going to show you those tools and resources that you get. And I keep saying platform because we're not just about trade alerts in a chat room. There's tools you guys have access to that professional traders use. Okay. So I'm going to go over this with you guys now. Okay. You don't enter them. You just write it down. MJ says, where do we enter the code word? You don't enter it anywhere. You just write it down, because if you are a winner at the end of the week, Adam will select people's names. If you win the giveaway on Friday, you have to be able to tell Adam all of the code words. You don't have to enter it anywhere. If your name is selected for Friday's giveaway, you have to tell Adam the code words in order for you to win. Okay? You'll win $500 if you're able to tell Adam all those code words. All right, so let me show you guys the actual platform. Okay, let me show you the platform. As a member, you're getting access to our chat room, of course. Okay, the chat room is, we share our screen, we're live on the mic, we're calling out our trades. I told you guys before, you're getting all of our trade alerts, a win rate just under 80%. Go check our trading journal. The trading journal on our website tracks every buy and every sell that all of our moderators make. Okay, all the take profits, the stop outs, you can go and see how would you be doing if you followed along with those alerts. Okay, we're fully transparent. You also get access to 2 small private study groups. This is a chance for you to get individual attention from one of our TTG mods and answer your questions. You get access to the Benzinga Pro newsfeed. Okay, you get access to the Benzinga Pro newsfeed, which will give you real-time news alerts right inside of chat. Guys, those code words were 9, 10, and 11 for those that were wondering. No more relying on delayed news. Traders that get the news first win. Okay, this will give you news as soon as it crosses the wire. You also get TradingView's charting software. TradingView's charting software is one of the most commonly used charting softwares by active traders. It's yours free. Everything that I'm showing you right now is included when you pay $12.25. Once you complete the courses and quizzes, it's only $10.75 because I'm giving you $150 back. So really for $10.75, you get access to all the things I'm showing you right now. Everybody welcome Gail. Gail, welcome. Guys, there's only 4 spots left. There's only 4 spots left now. Is there 4, Adam? Yeah, 4 spots left now. That's it. Guys, hurry up. This is not going to last until midnight. You have 4 spots left. All right. Once we get 4 more people, the cashback offer drops to 100. All right. You also get our trade ideas scanner. This is the industry standard scanner. We'll make sure you're focused on the hottest stocks during the day. Shows you what's making new highs, new lows, and what has a surge in volume. Make sure you're always focused on the best stocks. You'll also be able to use our simulator. Our simulator will let you trade stocks and options with fake money, but with real-time data, so you can practice implementing what you are learning in the courses. We have our own proprietary scanner that actually lets you scan for crypto, for my crypto enthusiasts that are out there. We have dark pool data, unusual options activity, information that used to only be available to professionals. Now it's at the fingertips of my TTG family. A full performance journal that will actually track your trading and give you details and statistics so you can see what you're doing wrong. Then you have a social sentiment scanner that goes through StockTwits, Reddit, and Twitter and tells you what stocks are being mentioned the most so you can stay ahead of the crowd. Analyst ratings on any stock you're interested in. You'll get a downloadable PDF report so you can see how many analysts have a buy, sell, or hold rating on any stock. You get a watch list every day, what stocks the mods have their eyes on and how they intend on trading them. That's our watch list and game plan. Every day you get access to that. And then the courses. The courses are a simplified yet expanded upon version of what I learned when I worked at the fund. There's beginner courses, advanced courses, options, swing trading, trader psychology, crypto, you name it, we've got it. There are no VIP pro courses that cost more money once you join. When you pay the $12.25, you get access to every course we have. Once you complete all the courses and quizzes, I'm going to give you $150 back. So now you only paid $10.75 for the whole year. You also get a video library that has workshops that we've conducted, like how to grow a small account, how to trade while working a full-time job. And then you can actually attend these workshops live when you become a full-time member. Guys, it's time you invested in something real, something that actually can help you reach your goals. I can't promise that you're going to make millions of dollars and buy a Lamborghini, but I can promise you a real chance at success as long as you put in a little effort. I can promise you that I'll give you double your money back if you fail to make your membership fee back once over the year. I promise you that I actually do care about your success, and the day that you sign up to True Trading Group is the day that our relationship begins. The ball is in your court now. TTGoffer.com, TTG121 coupon code. There are only 4 spots left. The next 4 people, you'll know you're one of the 4 if you see the cashback offer in your checkout cart. As long as you see it, you're getting one of those cashback offers. There's only 4 left. Then it drops to 100. The next 4 people get 150. All right. If you're still unsure about the membership, we have a 1-week trial. Go to TTGTHREE.com, enter your name, enter your email, click yes, I want this. It's a 7-day trial, folks. It's only $3. We charge $3 to make sure you are a real person. You get access to our chat room. You get our real-time trade alerts through our mobile app. You get the Benzinga newsfeed, 3 sample courses, our trade ideas scanner, all of that for an entire week for a one-time, non-recurring, non-auto renew payment of just $3. Go to TTGTHREE.com. After you click yes, I want this, you will then create your TTG account username and password and pay the measly $3. Get your butts in chat. Trade with me for the next 7 days. Do it, guys. Get your butts in chat. My TTG fam, I'll see you all in the morning. Guys, if you have not done so already, subscribe to the channel, smash that like button. I hope this live stream was helpful. I hope you learned something about the yield curve. I hope you have a greater understanding of the macroeconomic view of the economy and how the yield curve operates. Thanks for joining me tonight, folks. I'll see you all tomorrow. Have a great night.